Options Tender. It is the weekend edition. Thanks for joining us here. We're going to go through the weekly time frame and work our way down. Check out gold. We'll see ES and then also the expected move for the SPX as well. So before we go through that, go down to that bottom right hand corner, hit the Options Tender logo and subscribe, and then hit the notification so you can get these videos each and every day on the weekend. All right, let's jump into it. Okay, we have SPX on the weekly time frame. Looking at the oscillators first, we are making a bear cross. We are well into bull territory, so the trend is technically still up, but we are making a bear cross at this point. If we see the histogram start to rise, or I should say lower, the red bars here on the zero line, if we see those start to expand like this here, then we know that we're in a much bigger correction than than what we've had for some time. But right now, this just could be 2-3 week correction, and then back to the uptrend. On the RSI, we had a slight divergence, and we had one on the MACD as well, very slight. So just starting here because we made that all-time high, but the MACD line did not make an all-time high. RSI, same thing, just like this over here. I'm not saying that this is going to happen. I'm not going to say that we're going to have the Rona crash again, but just a observation that we had another slight divergence. And so now we should see a correction. We have the another sign. Let's dig in a little bit. But well, look at the Elliott wave. 1, 2, 3, 4. Working on wave 5. The big question is this the end of that full trend, or is this the end of wave 5 for here? And maybe we do a 1, 2, and then continue up. There's lots of different counts that can come out of this. So we'll just have to keep evaluating every single day, and then we'll go down to lower time frames so we can see, so we can evaluate a little bit better. All right, diving in a little bit more. This is just important. I'm spending a lot more time on the weekly than usual because we have that bearish engulfing now. This one is a full engulfing. It's not like where we're pushing off of the 8MA, pushing off the 8MA, had some demand there. We just fell like a rock. So we'll see if we get any follow through this week, or maybe we have a pause doji and continue the descent down. We have a rising pivot that is at the time will probably coincide with this 20MA, and that's very important. The 20MA for this uptrend. We've stayed on it. Once we got above it, we hit it here, 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 and continuing the trend up. So on the big picture, we're still bullish. But in the near terms, we just went underneath the 8MA here. So we just have to be careful. Any bounce that we get is probably going to be sold into, and until that changes on the lower time frames, then we have to be bearish for the time being in the intermediate time. Okay, daily. Trend is our friend. Let's do this. Let's get in a little bit closer here. We have a couple different scenarios that are possibly playing out. So starting from this pivot here, we have a possible wave 1, 2. And if you notice, the turquoise coincides with the turquoise Fibonacci retracement as well. So 1, 2, 3, and then 4. So that's one of many possible scenarios. Also, if we dig in a little bit deeper, this was a ending diagonal. So this was 1, 2, 3, 4, 5. That could be this alternate count here in the purple. This could be a wave 1, and then a wave 2, down to the possible 61.8, and then continue to the upside if we're going to be bullish at this point. Okay, we had a bearish divergent. It's playing out. Let's see if we can stay above this zero line. If we stay above this zero line here, then we're probably gonna have this purple scenario where we're in a 1, 2, and then 3 above. If we start to crack this zero line, you see like back here, we bounced off of it. We start to crack underneath there, and we have something else happening, whether this be a wave 4 pullback, 1, 2, 3, 4. And if that does not hold, then we have something bigger happening. So we'll have to monitor that. We're not going to check that out right now. So those are the more near-term scenarios that we're looking at. Okay. Also, we looking at the MAs, we lost the 8, we lost the 20, we're underneath the 50. We have to get back over that 50 immediately if we're going to be any bit bullish in the micro term to near term. So watching the MAs, we're definitely losing some of the momentum there. We do have the 100-day moving average, which coincides with the 38.2 pullback if this is a wave 4. And we'll dig in closer. Let's go to the 65. Okay, sorry about that. I had to pause the video. We lost connection there. We were lagging on Thinkorswim. So here we go. We're down to the hourly time frame, and this will give you. We have a good looking zigzag here where we can get a count. It's a 5 wave down, 3 wave up, and 5 wave down here. So this could be it. Technically, it could be it. I don't think so because of the indicators. So I could see us bouncing pretty soon here, maybe retesting the gap. We would put a retracement on it when we do see that we're bouncing. So we'd go to the top of the zigzag, top of that ABC, and then we'd come back and look for like a 50% retracement. It could go further. So we'll do that later on. But we have a zigzag down. We have an A, B, C. And then we could have an ABC correction up and then another wave down. That seems more like a more likely scenario. And, if this count is a little bit more bearish and this count is not correct, this could be a wave 1. Then we have wave 2, and then we have a much larger wave down. So that's definitely a possibility at that. We're not looking at for that at this point. So we're not going to assume, we're not going to predict. We're just going to play the action that's given to us. So we will be looking for a bounce pretty soon here, and possibly retest the gap. We'll see what that does starting next week. All right, let's check out the VIX futures. It's going to be a little bit longer video than usual. We want to make sure that we're digging in and seeing what's happening. We have this large wedge. Are we popping out of this wedge? That's to be seen. If this is the case where we break that wedge, the larger bearish scenario is going to be likely headed much further down on the ES and all the other indices as well. So we're crossing back up. We had a divergence. We're crossing back up. We have some MAs to get through, and then we have a falling wedge resistance here as well. So we could get this pop and then head back lower for another divergent low. But pretty soon we're going to see it pop out of here unless we break down from it. But so we want to be on guard and keep an eye on the VIX. I actually missed. I didn't do a video yesterday or 2 days ago when we hit this lower edge with divergence, with positive divergence, and I missed that move. So that it's very important to look at in my case, the videos every single day, just to see what's happening or what potentially could happen. Okay, let's go over to SPY. Let's get the right board on here. All right, trend is my friend. So what happened on the SPY? We had a ascending triangle, broke out of it, and failed. So after that, we also failed this trend line as well, coming back from the Corona bottom. And we have this rising pivot underneath us if we're going to get any support there. There is support right around the 413 area. So we might have to come bounce off of that before we head lower. But we lost we lost the 8 EMA, we lost the 20 simple, and the 50 simple. So we're underneath those with big volume. So that's not good. It's looking very bearish. But as traders, we play the downside just like we play the upside. All right. Also, this is we do have the possibility if we do happen to have some sort of news or we are more bullish than we think. We do have a possibility of an island gap. The bulls really want to island. We want to Sunday and Monday morning pre-market really want to get price back above and gap over this candle. That'd be an island gap, and that'd be very bullish. That's not likely, but that's what the bulls need in order to turn this around. Let's check out gold. Let's go to gold. We had a terrible crash in gold. We got stopped out on that immediately. But the big question for gold is this a 5-wave move up for wave 1, and then we're coming back for an A, B, C correction for wave 2. That's the bullish scenario, and we're right at that 61.8, so that's definitely a possibility. Or is this a bearish A, B, C count, and now we're starting the bearish momentum back to the downside, which this would probably be a 1, 2, 3, and then we bounce for 4 and head down for a 5 to continue this the bear trend down, because we seem to be back in that channel. Both possibilities are here. I'm looking for a bounce here pretty soon. We're getting to support right into this 1760 area. So either way, we're going to play the bounce to the upside, whether it's a wave 3 or if this is a wave 4 down. Okay. Yes. Let's go to 65-minute. And just like the SPX, we have our zigzag, and we ended right at support. We're also at a 50% retracement from the lows back in March. So we'll see if we can get a bounce here and then see what happens after that. We'll probably get an ABC, maybe test the downtrend line or the channel, or the channel and the long-term trend line. We could back test any of those and continue to the downside for either this is the rise or this is the ending diagonal. So the 61 retracement from the ending diagonal. Whoa. From the ending diagonal would be at the 41.16 area for wave 2, if that's the bullish scenario. Wave 1, 2 is the bullish scenario, and then we head higher. Okay. If this fails, then we're looking to go lower. If we break down from this 40.38 area, lower than this candle here, then we have a much more bearish scenario happening than we think. So possible zigzag down, ABC correction, zigzag down, and then maybe more upside from that point. Okay, but we are bearish until proven otherwise on this one. We're going to end off with the SPX. All right, so at the beginning of this, up on the left-hand side, we have volatility is back, and we're just showing that this is gonna show us the scenario. This is our expected moves. Each and every week, we use the expected move just to see it's like a playing field. It's like a football field. You have to stay inside those guidelines. You go out of bounds, and something's happening. So this whole track, we've been going sideways. It looked like we were about to break to the upside. We did not. We broke down, but we're right into this range again. So we still have to get through. We might retest the lower end of the range, and then if we break down from there, then we have a bigger scenario playing out. If we continue to head to the upside, maybe we'll get a true breakout and that'll be very bullish. So right back into this range. We'll have to monitor that, but you see we now have a plus or minus 90-point move, which is much different than what's been happening here. So this is our biggest range for some time now. We were creeping. We didn't touch the bottom or the top ledge for a few weeks now. We're just creeping our way out, right around, just grinding. It was kind of just, it was tough. It was tough. You had to play individual names because you weren't getting much action out of the SPX or ES at all. But now we're starting to get some movement, and hopefully we can just play ES real safe with futures and get some movement there and see which direction we're going to go from this point. We're probably going to hit the lower or the upper edge this time. Now that volatility is back, we're not going to get the same grindy action. So expect a big move to the upside or a big move to the downside. And I'm leaning towards the downside at this point, but we'll let price action handle that. Okay. All right. That's it for this weekend edition. We kept it within 20 minutes, 16 minutes. All right. Thanks for joining us here at Options Center. We'll see you on